Welcome to TheoTrade. This is Don Kaufman. It's July 12th, 2024. Just about 50 minutes to go to the cash close here on this Friday afternoon. And the rally goes on. And wow, just manic rotations along with this rally. Got to tell you, if you're looking at this marketplace, I do not care whether you're bullish, whether you're bearish. Both sides of trade, you gotta look at this and just be like shock and awe, especially after yesterday's just magnificent sell side activity yesterday, specific to tech. Doesn't matter. Why? Because you got right back on that pony today. Now, of course, everybody's going to look at this like, oh, the dip has been bought. In pockets, yes, but I'm actually going to show you some really interesting aspects of this, again, of what I am terming manic rotations, because simply put, they are. Like, we're not talking about manic rotations. Look, I'm just going to cut to the chase. You don't have to go very far, all right? Let's just go to the Russell. You want to see manic? All of a sudden, everybody realized, I need the Russell, okay? I want to be the Russell. This is spectacular. In terms of standard deviation, I mean, you're looking basically like a 4 sigma move. You're like, that's not even statistically like a thing, except it is, and it happened, okay? And here we are inside of the IWM looking at this, where all of a sudden, the IWM on a year-to-date basis, just bear with me on this thought, okay? Starting off, Wednesday? We're just going back to Wednesday. The IWM was massively unchanged on the year. I mean, it was up like 1.5%. This, okay, is now up 7% on a year-to-date basis, and that's the Russell. That's where I begin with a discussion of like, oh, well, why are you calling it a manic rotation? I call it buy the dip, okay? I'm actually going to get into quite some detail. And again, as I said, I don't care whether you're bullish or bearish. You got to look at this and be like, oh, this is, look, you think things were dangerous before, okay? Now, okay, this is just outright wild at this point in time. And you look at the advanced decline line. In fact, I really wanted to record this while this market's still open place. The advanced decline line, this is full-blown correlation to the upside, which, okay, if you will, it hasn't occurred. We've seen pockets of strength, but that pocket has continually come from tech. All of a sudden, we just ignite on a bunch of fronts, except of course Meta, in which case nobody loves me. I mean, Meta's still getting smacked way off the lows though. But push that aside for a second. Let's not put the cart before the horse. Look, this week, CPI, PPI, it's affecting some of the rate cuts out there, right? So a lot of people, of course, are going to have discussion of rate cuts, which, yeah, rightfully so. So CPI comes out. That was a little bit soft, but PPI came out this morning, and that was actually a little bit hot. So it's a bit of a catch-22 if you're wondering why we just rallied back up. Yeah, again, sell-side activity brought on. In fact, I think the best way to look at this is to go to a 30-day 1 hour. Okay, you're going to love this. 30-day 1 hour. We were here, and then CPI came out, and then we were here, and then PPI came out. It's just, again, really, really wild moves. As I said, push aside anything you think about the technicals and so forth. So rate cuts are, once again, kind of up in the air. And you would think with rate cuts, all of a sudden, okay, this is going to be a good thing for the marketplace. On the contrary, what was so interesting about the CPI coming out, it's one of the reasons I'm mentioning it. And typically I don't mention a lot of data, but you had a soft, okay, inflationary number, meaning inflation is finally cooling. All of a sudden everybody turned around and they go, that's not good. That means the economy might not be in that great a shape. We sold off. You realize, okay, all of a sudden, oh, it's good news. Inflation's coming up. And then the marketplace reversed. We are in, okay, again, a very, very dangerous time to where if data starts to weaken, rate cuts are going to become all the rage. I mean, they've been all the rage. Back in January and February, they're talking about 6 rate cuts. Then we were talking about the possibility of no cuts. Now we're between 2 and 3 rate cuts. I mean, it's like the rate cut dance over here. You realize the rate cuts aren't going to do very much, but the data is becoming more and more just almost paralyzing to this marketplace. All right. It's paralyzing it with fear. That data comes out, markets drop, market explodes back up. It's going to be a whole lot of chaos, though, every single data point that we are getting. Because again, it does appear that some of the inflationary data is starting to soften, which should imply, okay, that some of the economic data possibly cools off as well. It's not true though with PPI, and that's exactly why this marketplace rallied back up. Now, let's push again that aside for a second. And the technicals in here, like, I mean, do you really need to discuss them? Okay, you know, we were, as I was saying, we were here yesterday. We dropped, okay? We ripped once again. I mean, I think the best way to position this is to look at the expected move, right? So this week came down to the upper edge of the expected move. We dropped off of it. Here we are, rallied right back to it, okay? We're just a hair above, okay, the upper edge of an expected move on the week. And of course, that's what we use as a great demarcation of risk. And when I say we're a hair above, I mean, this whole week came down to Wednesday, we skirted the edge of the expected move. Thursday, we broke lower. Here we are on Friday, okay? Up, up, and away. Again, another 60 handle move inside of the S&Ps. If you guys remember, but back to last weekend's update, there was something I told you about expected move. What did I tell you last week? I said, don't dare sell short duration options. Okay, the expected move last week was 65 bucks, and I said flat out, I am a buyer of options. I am a buyer of options right now. We are outstripping implied volatility in the short duration, okay, like it's nothing. Now, let's move specifically to manic rotations, all right? So, manic rotations. What does that really mean? As I said, if we jumped over to the IWM, it's pretty clear. But to me, and I'm going to go into sectors in just a moment, to me, though, some of the manic rotation is there are stocks that we're buying right now that no one has wanted to touch in literally months. And again, I'm going to go off the beaten path. I'm not going to go to sectors right now. I'm going to go off the beaten path. Starbucks, okay? Nobody's bought this thing since, I mean, legit, the last time you saw buy-side activity in here, you got to go to the beginning of June, right? You're a month and a half into sell-side activity, okay? You'll see stocks like Intel. Intel, though, was already on the bid before some of these manic rotations, but Intel is up almost, 4.3% today, okay? This is what I mean by manic rotations. You know, I can come up, by the way, with a dozen different stocks that everybody loved. Like, for instance, Costco. I loved it. Here's another manic rotation. This is not a positive one. This is a negative one. It came in and smashed Costco on what was good same-store sales, announcement of a $1.16 dividend, and okay, they are raising their membership fees. People look at this like, well, that's a negative. That's always been a positive in the past. Nevertheless, stock got absolutely clobbered. I mean, I can show you stock after stock after stock where I said no one has wanted to buy stuff, okay? Look at like Nike, okay? Nike. How many people here have seen anybody buy Nike recently after the precipitous drop, okay? Even this thing is up today, all right? I could have sworn I saw Lululemon, that we were actually purchasing Lulu, and I bring these up. Look at this. They're on the buy side on Lulu. Nobody's bought Lulu. Hold on. Nobody's bought Lulu since right about here, okay? You're back in March, and all of a sudden, okay, there's a little bit of a bid back under Lululemon, right? Look, it's meager, but the rotation, if you will, okay, is into places where nobody's wanted to touch. Now, here's some good ones. Home Depot. Take a look at Home Depot. That big enough for you? Anything in home builders. XHB. Now we're starting to get a little more sector. XHB. They're buying it like it's going out of style right now. Okay. And I keep reiterating, you got to watch this carefully because all of a sudden we start buying junk that no one has wanted to buy. Okay. the shine is off possibly some of the technology companies. So with that, now we're going to go a little bit, okay? We're going to go a little bit into the tech, sector and expected moves. So just tech, I'm going to look at individually, and then sector expected moves. And what I mean by this is I'm going to bring up Microsoft and drop in here auto expected moves. So in terms of auto expected moves, all I'm trying to elaborate on this front is, and this will shock people. I mean, we all have to agree. Look, we're up on the week. The S&Ps are up on the week. You aware that Microsoft cracked the lower edge of the expected move? Okay. So Microsoft's actually what? It's down on the week, considerably down. All right, you got me on Apple. Apple's upper edge of the expected move. Amazon, lower edge of the expected move. Google, lower edge of the expected move. Meta, okay, getting hammered upon. Almost a 2 deviation move lower. Okay. Oh, Tesla, you got to love this one. Tesla is going to end up massively unchanged on the week. And then, of course, NVIDIA, upper edge of the expected move. The way I see it, you have NVIDIA, okay, and you have Apple, okay, that are the drivers. They're the punching force in tech, but that's it. So how come the market rallied this week? Because the market clearly, it wasn't heavily involved in tech. To further that, come over to the QQQ. What is the QQQ? It's the NASDAQ 100. You know it, you love it. The QQQ will finish, okay, almost unchanged. It is, to be fair, up just a hair right now with 40 minutes left inside of the trading week. But the NASDAQ did not perform. And I say, and the rally goes on, but these manic rotations, this is going to be watched very, very carefully, okay, next week. Now, let me go a little bit further into some of the sectors themselves, because as I said, I wanted to go down, and I got all the sectors on here. This is like XLY, but XLY is kind of like some Amazon mixed with a couple of other. XLY is very far from consumer discretionary. It's a lot of Tesla mixed with some Amazon. XLI, okay? A lot of people have no idea what XLI is. It's industrials. It's industrials. Look at this thing exploding outside of its expected move. XLU, okay? Here's another one. Whoever wanted to buy utilities, okay? Apparently this week, 2 times the expected move. Now, SMH, what's SMH? SMH, semis, okay? It is higher, but nothing to the likes. Look at this in healthcare, okay? Again, I can't stress you enough. Why am I going through sector by sector? Here's XLP. XLP is not exactly a performer, but this is not really great representation of consumer staples. XLB, okay, XLB in this particular case, 2 times the deviation. XRT, okay, which is another retail. This is almost into 3 sigma territory. Just wild stuff. KRE, this is actually regional banks, 3 sigma move. Okay, let me point out again, we're buying crap that no one has wanted to touch. So all we know at this point, look, not a lot has changed from last week other than these just wild and manic rotations. But you think, hey, when I say not a lot has changed, okay, hey, look, we're still at the upper edge of the expected move. We're still very, very bullish. The driving force behind this marketplace is no longer technology, okay? Since, I mean, roughly speaking, you're coming into Thursday and Friday, it's not been. Now, I'm going to show you something else that is a little bit obscure, okay? And that's this. This is the OCC report. And this is it's from last night. You're like, it's depreciated. Now, the reason I'm actually bringing it up, okay, when I start talking about, manic moves and manic shifts in the marketplace, I'm going to further that. That, people, is 64 million option contracts traded. Now, the year-to-date average is right here. It's been about 46, we'll call it 0.7 million. Just time out for a second. You do realize it's like mid-July. This is high time for holidays, okay? Yeah, 64 million contracts. Normally, I kind of take it with a grain of salt. But the fact that it's like mid-July, it's, to see that volume, okay? This volume is probably in the top 20 of all time, okay? And I know that kind of off the top of my head because I do look at the OCC report pretty much on a daily basis. So in the top 20 of option volume of all time, okay? in like, summertime, it's vacation. Look, it's not. There's huge shifts underway. So tech and sector expected moves and these wild rotations, okay, are definitely a sign of change in the marketplace. Now you can, scream all you want about change, right? I'm looking over at the dollar right now. Dollar actually imploded. That doesn't look like a high risk situation. If you take a look at the bond market ripped back up. Again, doesn't exactly scream risk. I look to the bottom of my screen, okay? And I'm looking at the bottom of the screen, stuff like VVIX, volatility, the volatility index. That is not screaming risk. One thing I want to elaborate upon just a little bit more, and that's this. These rotations can continue for a very substantial period of time, okay? These rotations can continue to kind of prop up the advanced decline line in here, with exception, of course, of Meta. But in the end, you're going to have to see, like when things get really crazy, you're going to know it because volatility would have to wear any risk at this point like a badge of honor. Now you could look at VIX, but on an intraday basis, I prefer you look at something like vol futures. Even in the midst of what was some fairly heavy selling that went on Thursday, I'm just showing you right here, like right here. Did you see volatility futures really start to break to the upside? No, unequivocally not. Volatility is still very much suppressed. Only when volatility moves, okay, is that marketplace ready to rock. For right now, just take it for what it's worth. The rotations, okay, you kind of feel like they're trying to save this marketplace, and it's manic, okay, but it can go on for a while, right? And that rotation that you're seeing over there, again, it took 2 and 3 sigma type moves. It took stocks that no one has wanted to touch. I mean, look at, again, at Home Depot is just awe-inspiring. It's like a 3 deviation move to the upside. It's inspiring because this is what it took. Home builders rocking to the upside, okay? People buying lows. Again, another like 3 deviation move. Sectors that no one has touched, like utilities, seeing 2 and 3 sigma moves. But that's what it took to sustain the marketplace without Microsoft. Microsoft, again, is ending the week down. Without Amazon, okay? Without Google, without Meta, right? Tesla finishing the week unchanged. Again, you're thinking it's summer, you're thinking it's slow, okay? Slow markets grind to the upside. I'm telling you though, option marketplace says it's not slow. Options dictate, okay, that this is getting all kinds of wild. Now, last but definitely not least, we go to the SPX, the mother of all products. Why do we go to the SPX? Because right now we are most definitely, we're outside the expected move. Now, with 30 minutes left to go, we could slip right back into this, and that's basically 56.32 half. We could slip into it, but right now we are outside the expected move. And this would amount, to, count them, people. This would be 2 consecutive weeks outside the expected move, which, as I said to you guys, like I look at volatility and I'll say it again here. I'm going to look at volatility this next week. Even after we had a wild child of a week that we're ending here in 30 minutes, even after all of that, right now we're only positioning for about a $62 expected move next week. Okay, about a $62 expected move. But next week also starts to kick into high gear some real earnings. There's some bigger earnings starting to come out. Like nobody seemed to care today about JP Morgan down a whopping $2, Wells Fargo down about $3. Okay, nobody seemed to care. It's banks. It's not unusual that everybody pushes it aside, but they're going to start to care next week because, again, some of the bigger tech companies are going to start coming out. All right, you're going to hear, okay, from the likes of, as I said, some of the bigger tech companies. Do we consider Do we consider like, right here, Netflix, bigger tech company? Probably not. Nevertheless, with earnings coming out, things are going to start to get interesting. And right now, we're only positioning for a $63 move. That's okay, but just over a 1% move inside of the S&Ps. Look, this is a lot to think about. Watch the rotations, okay? Because they could get all kinds of wild early in the week. I'm talking Monday, Tuesday. But if you really want to know, again, if this marketplace is going to go for it, you could see big sell side activity. Volatility, though, has to move. At this point, volatility has to be the confirming factor because otherwise all you're seeing is rotation, rotation, rotation. Look at this. All right. Little sell program coming in right now. Ooh, I see now. I love recording. Okay. When the markets are open, here we go. Right into the edge of the expected move, possibly, and then some. With that, look, I will be live all throughout the course of next week here at TheoTrade. With that, stay tuned for this very special announcement. Hey, this is Don Kaufman reminding each and every one of you the new Inner Circle starts July 18th. That is right, people. We are less than 1 week away from the start of the new Inner Circle. That is 24 highly detailed weeks of incredibly in-depth discussions above and beyond any of the TheoTrade archived material. In addition, something we've actually added to Inner Circle, there are going to be 3 live trades per month. We're actually going to have a portfolio kind of encompassing this Inner Circle. We're going to do Christmas trees, what we term inverted catapults, earnings crush trades, funky ratios, and the infamous infinity spread, trading ideas, the likes of which many Theo traders have never known. If you've been to Inner Circle before, well, you haven't been to this one. Been there, done that, you have not. I'm going a very different direction. Inner Circle is changing. Again, I'm reducing some of the theory and I'm adding a lot more in strategy. We're actually even going to have a session on in-out spreads and tweaks. Again, earnings trades, funky ratio spreads, Christmas trees, VIX volatility spreads, catapults beyond your wildest imagination. Inner Circle and the TheoTrade 2024 live event. We've actually put together a package deal for this. So I'm going to explain the TheoTrade live event in just a second, but it's TheoTrade.com/IC. That's I as in igloo, C as in cat. TheoTrade.com/IC. Again, this includes Inner Circle, which is 24-week mastermind, all archived, 3 trades a month, an email notification, and unlimited trading horizons. That is our Scottsdale live event. That's coming in September. I'll show you the dates in just a second here. If you cannot make it to Scottsdale, you can also stream that event to the comfort of your own home. Here it is, September 12th through the 14th, 2024. Again, get out from behind the computer. I really mean that, okay? We want to see you live in Scottsdale. We want to see you live in Scottsdale. Look, you can break bread with the TheoTrade team. We also have special guests, Tom Sosnoff. Tasty Live will be there. Paul from the CME Group, Tony Rago, Blake Young, Jeff Bierman, Corey Rosenblum, Gianni DePoce, Brandon Chapman, myself. Blake Young will be talking about the triple threat trading system, the money flow squeeze strategy. Tony Rago, life-changing power of one simple setup, and Day Done, the road to daily profits. Jeff Bierman's going to be talking about the Wall Street's secret weapon can be yours, the Genesis cog exposed. He'll also be discussing the parachute trading system, and Jeff Bierman will be doing a joint session with me. We're calling it Don versus Jeff, the odd couple. Options Mega Geek versus Professor Chart Tweak. All right, Corey Rosenblum's significant profits in sideways markets and the one pattern for spotting a trend. Gianni DePoce becoming a momentum master in minutes. Okay, hidden wealth in secret cycles. Brandon Chapman surviving the death of the dollar and big money magnets course, myself, I'm actually going to be doing 3 different topics. One of them is going to be building future trading concepts. That's actually how, for instance, we come up with things like Christmas trees, like catapults, how to actually do some of your own research, okay, and build your own trading concepts. My second title will be all skewed up, a trader's guide to Christmas trees. Finally, again, I'm doing that joint session with none other than Jeff Bierman. Look, act now. Live events, they always sell out. Always are going to sell out. And the X factor this year, TheoTrade, is literally 3 times the size of previous years. This is your early bird opportunity. The live event is strictly limited to 200 people. Look, the Inner Circle plus Scottsdale Live or streaming. It's a package deal, people. Scottsdale Live, you want to buy a ticket, it's $2,000. Inner Circle, you want to buy a ticket, it's $2,000 for 24 weeks. Act Now, it's $3,000. It includes Inner Circle, Scottsdale, live event, or streaming. Again, this is the time, obviously, to learn these strategies: geopolitical events, election year, Fed reducing interest rates, possibility of a recession. Okay, look, Inner Circle and the TheoTrade live event. It's theotrade.com/IC. Okay, we're even throwing a 30-day money-back guarantee on this. So come in, check out the Inner Circle. Again, Inner Circle, there's no stipulations to the money-back guarantee. It's a 30-day money-back guarantee. Check a couple of sessions out. Make sure it is for you. Get a couple of the trades, because we're going to be firing out at least 3 trades per month with that Inner Circle. Again, theotrade.com/IC. All right, see you on the inside.